So, hello and welcome to our next instalment of Nucleus Investment Insights. I've got a terrific topic today. We're going to be looking at, we've entitled it anyway, China attacks. We've got a series of things we'll run through just in a moment. Mind that noise in the background there. So we'll run through an agenda, but firstly I'd like to welcome our guests, or as always our panellists. So we've got our Chief Strategist of the MB Fund and Nucleus Wealth, David Llewellyn-Smith. Ni hao, David.
Ni hao, Tim.
And our Head of Investments, Damien Klassen. Ni hao, Damien.
Hi, Tim. Okay.
G'day, mate. Very good. Okay, so let's jump into an agenda. So we're going to first of all just run through some changes, I guess some broad changes in Australian attitudes towards China, and then flip that around and have a look at some changes in Chinese attitudes towards Australia and also, I guess, the world economy. And then we'll deep dive as well into a couple of key areas of interest, being coal, local visitors to Australia, and also real estate, Australian real estate as well. We'll then jump into some topics for looking forward and some projections, and I guess some really just an idea of where we think this is all headed. And then, of course, wrap it all up with investments implications, as we do for how we run money every day for the MB Fund and Nucleus Wealth. So with no further ado, I'll hand over to one of you gentlemen. David, is it, to kick us off with our changes in Australian attitudes?
Thanks, Tim. So I wasn't sure whether to put changes in Chinese attitudes or Australian attitudes first in this presentation, because they, not that we're seeking blame here, but just to understand who's responding to what when, and therefore, what the trajectory for the relationship is. I think you probably would put China first, but it's easier to describe if we start with Australia. So, as we're all probably aware, a few years ago we had a kind of internal affairs China panic in Australia, where it suddenly became obvious that there were Chinese influences in the parliament and the media that had not been fully exposed previously. Mm-hmm. A few books came out, The Silent Invasion being the most prominent, by Clive Hamilton. And, any number of different revelations, particularly around MPs who were, in various forms being paid by what appeared to be agents of the Chinese Communist Party to do various things. The most prominent example was Sam Dastyari of the Labor Party. Mm. And, he paid the price for that with his career. So I guess we could say 2 years ago that the Australia-China relationship, was pretty much in its default position for what it had been for the last 20 years. And really even before that, where we were just friends and it was all about trade. But suddenly it became obvious that China was in the process of trying to influence Australian policy, in particular foreign policy, but also domestic, and doing so in a way that was really not open, but certainly a violation of sovereignty in any kind of broad sense. So that triggered
And can I sort of, I guess, add to that? I think Australia's probably at the forefront of the developed world in terms of the influence. I guess this is sort of almost a bit of a test case. Probably Australia, New Zealand, possibly a little bit of Canada in terms of a bit of a test case in terms of
I think that's
how
exactly
far
right.
Can be pushed.
Yep.
And I think probably a lot of the things that were happening were things that could very easily happen in non-developed countries without the batting an eyelid, if you know what I mean.
Yeah.
And which I think is partly the idea as well. We've been doing this in African countries and Pacific countries and neighbours who don't have quite as strong sort of separation of powers and things like that. And that,
That's quite right. And nor were, some of the emerging markets where China had operated previously so openly, components in the US alliance network.
Yes.
And so, the activities of the Chinese in Australia were very much a direct attack on ANZUS, the Australia-New Zealand strategic alliance, US strategic alliance. And so the Chinese were really kind of pushing the envelope in terms of, the US hegemony That's its power structure in the Pacific when these activities started to come to light in Australia. And it was actually Trump administration that described Australia as the spearhead in this as well. So that's absolutely right. So the end result of this first kind of set of revelations was, of course, eventually some legislation to expose agents of foreign influence who were using money, basically, to win China influence. And that's basically a pretty big shift by itself, a kind of anti-corruption move, I guess, but it was very much targeted at China, even though it was couched more generally. And that kind of kicked us off into what was a series of kind of dominoes that then rolled over and has just made the Australia-China relationship more and more fraught ever since. So we kind of graduated from that into a new kind of awareness and even alarm about what China was doing in the Pacific more widely, because suddenly the new focus exposed that similar activities were underway right across the Pacific. China was doing its Belt and Road Initiative, again, a lot of clandestine payments for this and that. There were deep water ports that were being mooted and built in various Pacific islands. They were very active in PNG, and there's some, quite unsettling developments around PNG democracy. And all of it kind of coincided as well with this rather large island grab that China has been doing in the South China Sea with militarised islands claiming a lot of international waters for itself. So Australia, kind of following the Dastyari stuff and legislation, then took another step towards, I guess what we could say was what we're really saying here is we entered the US-China Cold War, such as it is, more or less on the US side.
And I guess to put that one in perspective, that's coming, I guess a lot of that comes from the Pence sort of speech last year, where he sort of laid out all the different areas of conflict between China and the US, and trade was just sort of one relatively small part of that. Like there's there's sort of, I guess part of the deal, taking that step back, was that China came into the World Trade Organization and there were all these sort of freedoms and things they were going to sort of open up to, and that progressed forward for a bit, but the last few years has been very little progression, and some would argue that they've sort of been going backwards on a number of sort of key measures there, and so that whole part of becoming the part of the world trade part is that companies and countries were outsourcing stuff to China that they wouldn't have considered outsourcing to what they would consider a foreign adversary. So there's things which they're getting made in China that they wouldn't have countenanced getting that made in Russia or Iran or a country that was sort of seen as hostile to that country or that the country that company was in. So China actually got itself into quite a unique position for a communist country, and that was with its own ambitions, but I think that was part of that was you'd probably blame Obama, I guess, in terms of being too light-handed. He's sort of there for a lot of that period,
I mean, Obama had a China containment strategy of sorts in his pivot to Asia, away from the Middle East. But it was it was much less comprehensive than what came under the Trump administration, and it kind of was more of a shift in strategic framework where the US was preparing a sort of a broad military encirclement that was going to try and contain China over the very long term. But he left China free to continue to develop through that position that you've described, relatively untouched.
Yeah, and the idea was that we help China develop, China becomes more of a more democratic and more helps its people and
Do you feel that essentially, going back to say Dastyari and when all this sort of kicked off, it was a big awakening on essentially, well, I suppose it's stepping a little bit away from the Australian attitudes thing, but where there's a commercial aspect and then there's sort of like a government aspect that sort of, that work in tandem, whereas then all of a sudden China comes along and, through Chinese companies and big state-owned enterprises effectively is what everyone started to realise is, in effect, those two are intertwined when you're dealing with a Chinese company. So you've got Chinese companies, say, supporting, political and commercial interests in Australia, and then all of a sudden they realise, hang on a second, this is effectively now becoming a state issue as opposed to just something that we can let along, a liberal sort of trade policy. Okay, we want into country trading. Now it becomes actually a state problem.
Yes. I mean, I don't think it's entirely fair to characterise Chinese firms as all government agents. Like, that's not fair. But certainly SOEs, even some SOEs have a bit of an arm's length to the government. That said, they're obviously answerable to Beijing in the end. But I think that what you've just described there is now just absolutely crystallised in the relationship between all parties here. And that's more or less a shift away from the free trading regime that existed in the US hegemony to an inevitable response to the Chinese spearhead of bringing that state commercial tight-knit arrangement into that regime. And now those that used to manage it have no choice but to respond in kind. Because what was happening was China was eventually just going to dominate that system. And so if you want to preserve it, it did need a combined kind of response. That said, the commercial and government relationship response from the West is still far less tight-knit than any response or any drive from the Chinese side.
And do you think that's a component of the fact that we are quite separate in the fact that commercial and we're, I guess, this is the way the West has always operated, where government and commercial interests, one operates on one set of rule books and the other one operates on another, and now you're dealing with someone that has their own.
Well, the promise of China was always, or the Chinese entry into the global trading system was always, free one economy, two systems. As it happens, as it's turned out, that does not look compatible. Not the way China's currently operating, anyway. And that we might discuss that later. Is what the pivot was for China. I mean, it seems to have been basically the rise of Xi Jinping to a kind of imperial status. Has triggered a lot of this stuff. But I guess just going back to our chronology then, so Australia then, even before the Pence speech, the sort of deep states of the US and Australia were on the move. The spooks suddenly became extraordinarily influential, having been marginalised for many years. They got the ear of everyone in power, and Australia pushed back quite hard in the Pacific under Turnbull. And there was, some pretty meaty rhetoric on both sides through that, but basically Australia started to beef up all of its aid to combat Chinese aid, plus, was putting some pretty serious investment into some broadband and things like that, but also, wherever the Chinese footprint looked like it was going to fall and create what were almost paramilitary presences in deep water ports or what have you, then the Australian presence would pile in on top of it. And that's still ongoing. Australia, even yesterday, we're going to relaunch our old soft power TV network in the Pacific using the new Bogan network, which is an extraordinary waste of money. But this is only the thin end of the wedge, basically. This sort of sentiment and strategic outlook change in Australia also started to take shape at the Foreign Investment Review Board, and we started blocking major Chinese acquisitions. And what you were discussing before about the segue between Chinese firms and Chinese strategic goals in Beijing has now almost merged into one as far as FIRB is concerned. For instance, we had Hutchison, who's the guy that owns Hutchison, the Hong Kong billionaire, Lee. Yeah, he has very extensive infrastructure holdings in Australia already. He's always been, a good corporate citizen and thoroughly welcomed as an investor. He made a play for Australian Pipeline Group, which was, basically the gas monopoly on the East Coast, largely on the East Coast, some in the West. 3 years ago, probably would have got through. And he's a guy who is not particularly well known for being close to the Chinese Communist Party. He's Hong Kong based, does have mainland interests, clearly would know the elite levels of the Communist Party, but not associated with them particularly, but he got blocked. So it's quite strong pushback now for FIRB and foreign acquisitions. You can probably see, then in the background we've got the Trump kind of trade war playing out, and that escalated, a great deal with the Huawei arrest and stuff, and the whole kind of tech Cold War, where this is again where commercial interests start to operate in tandem with the state, especially Silicon Valley.
And there's been a pretty steady drip of news articles on various things, whether it's internet traffic diverted through China for unknown reasons, or spy chips on things, and so that which seemed to be a government driven release of information to
Yes.
That was that's what amazes you with some of those stories where it was all sort of known 3 or 4 years ago, and I guess essentially a politician's gone, okay, what have you got for me for this week? I've got my barrow to push. Out they come. Yeah, sure.
So Huawei has intensified everything again. Australia has basically blocked Huawei from being involved in 5G, which is a big deal, and one local operator has already pulled like $1 billion deal that they were going to roll out Huawei equipment, and there's ongoing negotiations across the US alliance network over this. Britain and New Zealand are kind of toying with deals to let them in under certain conditions, but that's sort of still up for grabs. And then, more recently, Australia responded with something that was really quite out of the box, and that was the exiling of Huang Zhimao, who was actually the guy behind some payments to Sam Dastyari, which is where we began this discussion. Plus, he had been a very prominent donor in the Parliament, and
to both sides.
To both sides. He'd set up Bob Carr in a pro-China think tank. He'd been throwing a lot of money around, and he went for a trip to Hong Kong, I think, or maybe the mainland, I'm not sure which, and the spooks just put the foot down and wouldn't let him back. wouldn't let him back in. He was a resident, but is now essentially in exile. His application for citizenship rejected, and so the Chinese media has been in foment over this as well. And so just in the last few weeks, we've seen what I see as a bit of a tipping point in the Australian attitude to China, when we've seen, a whole bunch of Australian former politicians, mostly, who are either working for or in some way in tandem with Chinese interests in Australia, suddenly resign from various prominent positions. So we've seen Bob Carr go from his think tank after years of defending the China-Australia relationship with a to be kind, a glass half full kind of framework. John Brumby, abandoned Huawei. Andrew Robb this week got out of Landmark, and I think this is really telling us that the shift towards scepticism of China in this new Cold War sort of 2.0 environment in which we find ourselves has made a step change for Australia. These are careerists who are getting out because they can see the writing on the wall, I think.
Or they've been told the writing's on the wall.
Well, or they've been told the writing's on the wall.
Yeah.
So
don't leave Australia, fellas. You might not come back in.
Either way, it looks to me like the old adage in Australian foreign policy for the last 20 years has been, the Yogi Berra saying, when you come to a fork in the road, take it, on China and the US. We don't want to make a choice, and quite rightly we shouldn't make a choice, But it's simply the case that Chinese interference in Australian sovereignty reached a point of critical mass such that, the Australian strategic management, if you like, has kind of been forced to make something of a choice. It doesn't necessarily mean Australia has abandoned its relationship with China, but we've had to put up some boundaries and say, look, you can't go here or you can't go there. And at the moment, it's really about what China will do in response and how far they'll try and push it to knock those boundaries down or go around them.
The other one, not on that list, and I haven't seen anything recently about it, but when Joe Hockey was Treasurer, there was a bit of movement on the whole housing, foreign, what are we going to do about foreigners buying Australian houses that are sort of basically just openly skirting the rules, and he had some forced sales, and then and sort of a whole plan about what he was going to do, and then he was deposed, and everything all went away and it all went quiet, and a big flow of more foreign money came in.
Yep.
I guess as a key sort of plank in the housing market, we've sort of spoken about China fleeing the Aussie market.
Yep.
But we haven't spoken about whether Australia's going to wait until the horse is gone, obviously, but then close the door so they don't come back in, or what's, I don't know. Have you heard anything on that front?
I haven't. I mean, the ATO was asked to police those new laws from Hockey. Yep. And they appeared to be determined to do it until he disappeared.
Yeah.
And then, if you call it free trading, the free trading Turnbull, I think, just rang the ATO commissioner and said, just pretend. That would be my guess.
Yeah.
And so, as you say, the money ran amok again. I guess we'll come back to this. I don't think it's going to matter either way, because I don't think the Chinese money's coming back. But will we close the gate when the horse is bolted? Look, maybe the whole International Task Force Against Corruption's on the move, and they're doing, they've had this AML legislation, which has, been smashing Australia on Chinese laundering of drug money, God knows what money, in Australian realty for years and years and years and years, and that could be a trigger.
But that's interesting in that the whole will Australia tighten up to stop Chinese pious civil servants on $30,000 a year coming over with their millions of dollars and investing in Australian property? China generally doesn't want them to.
No.
So they're...
Well, this is the irony of a lot of this, because a lot of our political economy was so corrupt around many dimensions of the relationship in the last 10 years at least, that a lot of the Chinese shift in Australian attitudes has actually been doing enormous favours to the Australian domestic populace, because our own leadership was so corrupt that they didn't do anything about it. And real estate's one example of that, definitely.
But it's almost, there's the three sides we're trying to play, all of them. We're trying to play the US side. So yes, we're close with the US and we want to stay close with you. We're trying to play the Chinese government. Yeah, we want to be close with you and import and export as much as we can. But we also want to be close with all these people who are fleeing you with all this ill-gotten gains and investing in our houses.
Look, basically to now it's been whoever offers me $1, I'll take it. That's it. There really hasn't been much of a plan beyond that. I actually interviewed, the diplomat interviewed Peter Costello in 2006, 2005, when he was angling to roll John Howard.
Yep.
And we asked him, what's your long-term plan for China? And he said, it's going to democratise and turn into a liberal economy. Right, and that was it. There was nowhere else to go. And so that's been the prevailing attitude. Like everything that has been happening is all part of reform as far as authorities were concerned.
She'll be right.
Then she'll be right. So it really has been a case of, if you come to a fork in the road, take it. And keep splitting it, keep taking it.
Somebody offers you $1, take it.
Take it, that's right. So that's where we've been.
Do you think that, just finally, do you think there's a potential olive branch for sort of Australian-Chinese relations in perhaps helping to facilitate the information flow of people that are maybe... So you sort of think, if you put yourself in China's shoes, you've got a big list of people that you think maybe have run away with a fair whack of ill-gotten gains.
Yeah.
Is there something for Australia to turn around and say, well, look, any information you need, we're going to try and stop it on our side, but, and therefore removing Australia as a bit of a, happy valley that people can run off to because you've got something there? Would that appease
we've
them?
resisted that to date. We wouldn't do extradition.
No, well, that's, I guess, the next stage, isn't
and
it?
to be honest, I don't think it'll ever be done now. And there was the Four Corners stuff this week about Chinese bounty hunters roaming the land, trying to reclaim assets and people,
through the legal system.
And sub-legal, and I mean, at the same time, Australian authorities have helped as well.
You'd like to think we're in with the whole rule of law thing.
But but it's piecemeal is the point.
And slow from the sound of things.
Piecemeal and slow. So, Australia has been a pretty reasonable bolt hole for the Chinese, but I think that's also in serious jeopardy, because I don't think the Chinese are going to increasingly they're not going to let money leave, but although Australian attitudes now have hardened towards China, and that may make it look like more of a safe haven for the Chinese, only if you don't want to go back to China. Like previously, there was a sort of freedom to be both Australian and Chinese. As if the current trajectory of relations continues, that's not going to happen. You'll be one or the other.
Choose a side.
Yeah, I think so. More so than it's been. So the prospect of this being a safe haven is less attractive than it was in that sense.
Okay.
You'd be limiting your options more than you used to.
Sure thing. All right. So
you can see that in Huang Shmao.
Yeah.
In his exile. That's obviously a very prominent example, but it is an example of how that's shaping.
All right. So changing to the other side now, looking from the Chinese borders, changes in attitude globally.
Yeah. Well, I guess we've kind of already intimated some of these things. I think the easiest starting point for a lot of these changes is simply the rise of Xi Jinping as a new Chinese emperor,
an enduring leader,
and
sorry, just to put that in perspective for anyone who's not following it closely. It used to be that China's leaders had fixed terms, and he managed to appoint himself as a lifetime leader. So
and what followed was just a much more aggressive power projection policy all around the world through various mechanisms, the One Belt One Road and island grabs in South China Sea, and this sharp power, as it's called, which is what we've been describing, which is the United Front, they call it, which is a Chinese Communist Party kind of social club almost, where shadowy money tries to influence policy behind the border in various countries. All of these things have been part of a much more aggressive outreach from China since the ascension of Xi Jinping to kind of permanent leadership status. So I see that as a bit of a turning point for these attitudes. The interesting thing now is, as we've described, you've got a pretty reasonable catalogue of Australian pushback, and it's been happening worldwide, largely under the aegis of the US trade war. But for instance, Europe isn't vociferously behind the Trump attack on Chinese trade cheating, but it's tacitly quite supportive. Places like Germany, for instance. And
it's outright rejected sort of some of the advances that China made to...
Yes, China did try to charm its way out by isolating the US, and that didn't work at all. And so, this is a really interesting moment now for China, where it's kind of had this global pushback. There's a lot of unpopularity kind of around the Trump administration, but the one thing just about everyone agrees on is, he's called out China, rightly on trade cheating. And so where does China go from here? And, it's basically for the last 15 years just laid low, right? And as Damo described before, worked its way into this fabulous position in the global economy and trading network, slowly built its power, very much avoided treading on anyone's toes, especially the great power of the day. But it's getting this pushback now on all fronts, even on One Belt, One Road, in areas of the world that are not especially US aligned. A lot of the investment is being shoved back because it comes with strings attached that the local regimes are not keen on. So what does China do now? I mean, it appears to be bridling, which is getting more aggressive rather than perhaps taking a hit at this point, maybe doing a decent trade deal with the US, or at least trying to get one done, that would kick the can, and it can just lay low for another 10 years and maybe generate a little bit more policy acquiescence in the West. Just keep things under wraps for longer while it gets bigger and more powerful. Rather than that, it seems to have gotten more aggressive and hostile, and one might even dare say irrational in its responses. So we're seeing things, like the Canadian arrests following the Huawei arrests, which really look like
tit for tat,
reprisals. There appears to be something going horribly wrong in New Zealand student intake numbers. That's preliminary, but it looks that way.
So when you say that, what do you mean?
The enrolments are diving. Okay. Basically, we can't say for certain at this point what that means, but it could be something along, that New Zealand needs some external pressure. We saw last week this extraordinary cyber attack on the Australian Parliament. Now, you can see the Australian government is trying to manage these conflicts by not pointing the finger at China, but under the radar, everybody knows who it was, and that's been published, in various reliable sources in the press. And the Chinese media itself has become it's always been a very loud mouthpiece of the CCP, but even more so. Every time there's a new issue, it's banging the drum. And so, there's a bit of a pattern of behaviour here where China's, having been pushed back from what was a sort of clandestine strategy, has been forced into the open, and rather than perhaps, just take a bit of pain and regroup, it's actually getting more aggressive instead. No.
And that was that interesting theory I'd sort of speaking about before, where the reason, suggesting some of the reason behind it was that they had the leaders of China 10 years ago had grown up in poverty, and 10 or 15 years ago had all grown up in poverty and had seen the dramatic transformation and accumulated all these wealth. And there's a lot of people, though, a lot of the junior people who were then appointed had grown up in wealth and had never actually seen anything different, and had always had been to foreign universities with millions of dollars and multi-million dollar penthouse apartments and all that type of stuff, and so had grown up with a more of a sense of entitlement about what China's
rights
role and rights and things like that. And so the question is some of this being driven by that, which is just a bit of a generational change in terms of who you're dealing with, in terms of I don't want to lay low for 10 years. I want things now, and we've paid good money for those politicians. I want to be allowed in to do what I paid them originally to do.
Interesting.
Yeah, could be hubris. I mean,
it doesn't seem rational, though. As you said, it doesn't seem like a rational response.
No, it's not what I would do if I were carefully planning my
world domination.
My world domination. No, I'd lick my wounds and I'd
come back in 10 years' time.
Yeah, I would. I mean, quietly just go back to doing what we were doing. Stealing tech and so obviously, some of the calling out of China is going to make that more difficult. But I still think they could have done a good enough deal with the US to stay under the radar a little longer.
Yep.
But anyway, they don't appear to be doing that, at least not for the time being. So this is where we start to begin to tip into potential implications, direct implications for Australia. And one thing I haven't mentioned yet, as part of this pattern of more aggressive behaviour, is Australian coal, which in December suddenly got on the nose in China and started queuing up at ports and undergoing, mysteriously long customs approval processes and what have you. Now, it was also initially broader, this coal slowdown from China, like just importing less. But over the sort of 3 to 4 months since, it's just gotten progressively more targeted at Australia to such a point now where Australian coal is just being explicitly and in particular being held up at Chinese ports, and it's both thermal and coking coal. So we've got this chart here, which from Credit Suisse, which showed this is up to the end of Q4 last year, the end of December, and the red line shows you the export volumes of iron ore and coal.
And for anyone who can't see, it sort of hung around at sort of above zero for a while, and then pretty sharply at the end of 2018 has dropped to sort of minus 40%.
Yes.
And sort of back to just minus 20% now.
That's right. And that was all thermal coal in Q4, and then it started to rebound. But suddenly now, in the last month, and in particular the last few weeks, it's shifted to coking coal instead, and now thermal coal's in the doghouse again as well. So while these are not particularly harmful real impacts for Australia, they would be if they were permanent, but given they're more likely to be temporary messages
Signalling.
in economic form, some signalling, they do potentially have in them some damage in that volumes is the input into GDP via net exports, not prices. Now, we know prices have been going crazy after Vale and its terrible accident for iron ore and coking coal, but more important for GDP is volumes. Volumes are the actual calculation that tips into GDP. So net exports for Q4 would have been booming on the back of LNG and some other stuff. Had this not happened, instead they'll be basically zero. And it sets Australian Q4 GDP up for a big miss. And that comes out next month, I think the day after the RBA meeting. And, it's odds on that we're going to get quite a nasty number. And so it's going to blow up everybody's forecasts. It'll damage sentiment, which we know is already kind of breaking and brittle with the housing market, tumbling. And what's more, it's shifted now to Q1 of this year. And so this could actually play a role. This will almost certainly play a role, in my view, in putting Australia in a per capita recession. We're already in per capita recession in the September quarter. I think it's quite likely we'll be in per capita recession in December. So, again, that goes to sentiment and, it won't help the consumer. And then it's quite possible that, that will be sustained also into Q1, all on the back of this coal's fiddling by China. So the real impacts are not really the coal in that example. Okay, so that's one thing where we're getting some signalling, as you put it nicely. The next one, and this is maybe just pop over to the next chart and we'll show a real impact. This is the boom and bust in Chinese capital flows into real estate via FIRB numbers. You could probably times this by about 100 to get the real numbers. Yep. Because the NAB survey at the time, I think, was showing at the peak of the Chinese capital inflow that the Chinese were transacting almost 1 in 5 Australian housing purchases.
Wow.
And
that's for anyone just listening in on the podcast. That's just sort of showing a very steep decline from sort of 100% growth.
Yeah, just massive boom and massive bust.
2 or 3 years ago, back to
And there's also the charts will be available in a link in the podcast notes.
Now this outflow of capital is clearly playing a role in making Australian house price correction worse, like much worse. You might even argue that this is what the major driver. This is going to continue, and this is going to do real economic harm. To be perfectly honest, we have it coming. We should never have let it in the first place. So it's a bit pointless kind of bewailing its exit. It's a good thing over the long run that it goes, but nonetheless, it's going to do real damage to the economy, obviously through the usual channels and multipliers of falling house prices.
Yep.
Okay, so that's another signal that we're getting, and then if we pop back to the former chart, which is Chinese visitors, tourists and students. This is the big one for the future, and as you can see, for the last nearly 12 months, the trade has plateaued. The number of Chinese coming in as tourists and foreign students hasn't grown over the last 12 months, and this is a very easy lever if the Chinese want to get a little bit more nasty and put a bit more pressure on. They can flick this easy. They just tweak their visas and their visa system, and suddenly this trade collapses. I don't know if that's coming, but it's the next obvious risk for the Australian economy. And you could argue, given the growth trajectory before that something along those lines is already happening in the tapering, and the plateauing of the numbers. That said, it could be related simply to Chinese economic weakness, which is obviously at the moment deepening.
So this is a tourism or education or both?
This is both.
Yep.
Together. And what we're seeing in New Zealand may be the leading edge of political pressure to come here. So this one is in particular related as well to the capital inflows into real estate, because the student trade in particular is associated directly with apartment purchases and therefore dwelling construction, etc. So this potentially could make the real estate bust also worse, but more generally than that, if the trade doesn't resume growing, everyone has ongoing growth in this thing till 2050, 2100. If it just flattens out, it's another blow to the Australian economy. There's a lot of education investment underway that will taper off, but this one's on a sort of watching brief as the next big risk if this relationship continues to deteriorate.
Okay.
So we want to move forward to.
We'll jump to looking forward in the interest of time.
Yeah. So I guess recapping, I think Australia has been more or less forced to make a Cold War II choice, Cold War 2.0 choice. We're fighting against it, but it's proving very difficult, and China becoming more hostile is only going to make that harder. I think the more they push, the more we'll be forced to push back rather than acquiesce. So, we still think we're probably going to get some kind of US trade deal between China and the US, and that's obviously holds out the hope that relations between the US alliance network and China will improve in the short term. However, we don't think we'll get a substantive deal. If we do get one, it'll be largely based around helping improve the bilateral trade deficit and some kind of can kick on the tech stuff. Not sure, but I don't think it'll be it will resolve the great power tensions.
Won't be a dam buster.
And we suspect probably more designed around stopping future escalation rather than trying to roll back existing issues and things like that.
And I think we touched on this with one of our China ones, where China can wait out Trump, but we can't. Trump can't, or US can't wait out Xi Jinping. In terms of
but if your choice is waiting out Trump to get somebody who's just as, regardless of which other party, they're just as hardened against
Sanders,
and actually quite possibly more likely to negotiate with a future in mind rather than like a longer term future in mind rather than the next sort of tweet, the next sort of claim of a win, then I would argue you're better off trying to get a deal with Trump that you can probably entice him with here's this great big short-term gain for a long-term loss, whereas I don't think that's possible with a lot of other more long-term minded.
Astute.
Yeah.
Fair enough. All right. Yep.
So that kind of deal would actually itself be quite bad for Australia, because it would represent a lot of trade diversion that would directly attack Australian exports to China, in particular oil and gas. Even if we get that deal, it's potentially intrinsically poor for Australian economic outcomes.
So when you say that, you mean the potential for the US to step on the fingers of Australia to prepare
to basically take
Australia,
what a trade into China that Australia currently enjoys goes to the US.
Yeah, I mean, we were arguing that probably not. That's across the board. It's probably not as likely, but there are particular sectors, and gas is the one big sector and oil as well. We were arguing for, pretty much since the start of Trump, is that, if Trump's complaining about China, the easiest thing China can do is just start saying, well, we'll stop buying oil from the Middle East and we'll start buying it from the US, and that just means that the whole world will shift around where they use oil, but they get to fix, China gets to fix its bilateral US without changing its actual trade balances, really, besides just shifting things around. It would have been a relatively quick and easy win. And it's still there as one of the potential things that could happen, which just basically means Australian oil and gas will probably just have to go somewhere else and travel further to get to wherever it's going.
Now, the latest news on the deal is that China will commit, in inverted commas, to a stable yuan as well. Now, that may sound good, but it's not for Australia. This is where we get into obscure macroeconomics and the impossible trinity of controlling interest rates, capital flows and your currency all at once. It's impossible to do. So if they're going to commit to a stable yuan with the US, it means they're going to have to shut down capital flows to do it, because they're also got a domestic slowdown underway, and they are going to have to continue to ease monetary policy, cut interest rates on the back of that. That would normally sink your currency. Capital will flow out. They're going to have to block that. And so this is where you come around again back to Chinese capital leaving Australian real estate. If the Chinese are going to commit to that stable yuan, then Australian real estate there's no resumption of that Chinese trade flow. And in fact, a lot of it, more recently there was news that a lot of that stuff may even be forced repatriated. There may well be Chinese forced sales in Australian realty. The penalties that have been ramped up significantly for cheating Chinese capital control laws. You're now at 5 years in jail, and organs harvested, etc. It's another element of any deal that
David's saying that organs harvested with tongue in cheek. Just to clarify.
Yes.
As opposed to tongue out of cheek.
The 5 years jail is real low.
Yes,
not fun jail either.
No. Well, So another possible outcome here, or something that will be influenced by the short-term US trade deal, is what degree and where does China stimulate? They're less likely to stimulate with the deal, and more likely to stimulate without it. And then you can sort of extrapolate from that the various winners and losers. Without a deal, obviously they'll probably try and build some more, but is that good for Australia? I mean, maybe for a year. But at the same time, after that, how long can they continue to do this crazy building? I know we've been talking about that for a long time, but it certainly looks like they're running into trouble on that strategy. Further reprisals, again, if we go back to possibly the education and tourism trade, if again they've got to hold the yuan stable, but while trying to stimulate domestically, it could be the capital controls are not strong enough, and they actually have to shift those controls into the trade account, and they have to stop tourists and students leaving the country to keep the money in the country. And so it does potentially represent a very nasty blow ongoing for Australia. And all of that is just macroeconomic. That's not even geopolitical. Like obviously doing the deal on the yuan is geopolitical, but the consequences of that are simply macroeconomic. They're dominoes that simply flow in macroeconomic order. So yes, I mean, I guess swing to that next chart and we can run through it. I mean, it's bad for Australian realty, it's bad for Australian oil and gas, it's bad for the student tourism trade. Could be short-term good for bulk commodities, but eventually it's bad with too much, Chinese debt, and it's pretty much all bad. I mean, I don't want to overdo it, but this step change in both the US-Chinese relationship and as a subset of that, the Australian-Chinese relationship does not hold out good prospects for the current Australian economic model. Now, if you have a long view on these things, as we do, you probably wouldn't see it as a bad thing to actually reform that structure. Anyway, we always argued we should never have gotten into it in the first place.
And so when David is talking about the structure, what we're talking about here is that with the rise of China, Australia has restructured its economy to be a supplier of either resources, of education, or in tourism, and we've basically let most of the other industries all die away, whether it's through high gas prices or high Australian dollar, sort of forcing out manufacturers and services, and so we've sort of attached ourselves to the Chinese
growth model,
without the wider term view that's saying, well, if something like this happens and you get a falling out between, and we need to pick a side, and the side isn't China, then you have to restructure your economy back to something else the rest of the world wants.
Yeah, and so to do that, you need to fix primarily your real exchange rate so you can compete again in things other than what Damien just mentioned, non-resource exports. Tourism can still be tourism and education would still be be able to grow even without China. You'd have a Chinese adjustment, but those sectors can obviously operate in a much broader context than just the Chinese trade, but they've been allowed to kind of gear towards China in a big way. But you need to fix your real exchange rate, which means interest rates are going to go to zero. Your currency's got to fall a lot. You're going to go through a long period of low wage growth, low inflation, and eventually you come out the other side more diversified and less dependent on China. And I think that the framework that enabled us to do our one-trick pony economic model,
path of least resistance,
is more or less ending. So that's the path that we were going to end up having to take. And it doesn't come overnight, of course, and you get various adjustments along the way. You get one in housing now, you get one later in interest rates, or earlier, whatever, or a currency, whatever it happens to be. But as the various components of that model unravel, then the other variables in your macroeconomic makeup just compensate, and you go through various adjustments until you come out the other side. The truth is we're still quite well placed long term in Asia, and I don't fear for us long term in terms of economic prosperity. We just did a one-eyed bet, and it's worked really well. But I think it's now we're going to pay a bit of a price for it.
Time to pay the piper. Okay, and just quickly, and finishing up whilst we're on the topic of investment implications, both David and Damien, but practically, I guess for those listening at home, how are we positioning portfolios with Nucleus Wealth, given obviously the outlooks here?
Yeah, so the big thing I'd like to focus is on the diversification side, is saying there's a lot of Australians, and I've got an article David's about to post on this very shortly, but there's a lot of Australians whose assets basically consist of some Australian shares, which are based, and in the Australian market, we've got the banks, and you've got all the real estate developers and property trusts and all these people all in the housing market, and so they're sort of all exposed in that. If you've got any fixed income, it often seems to be hybrids and stuff like that, which is often bank related as well. If you've got a couple, odds are that one of those people work in some sort of property related business, whether it be finance or development or
mortgage broking,
or real estate services. You go through the whole raft. So when people look at their portfolios, they should be saying, okay, they might disbelieve everything we've said and said, no, I think Australia's going to sail through, something's going to show up, and I'll be fine. But the issue is, if you're fine and all you've got is assets that are leverage to that, then don't worry about it too much. If your job's dependent upon that and all these other things, what you want to worry about is a case where it's not fine, and that case you do start to go into these some types of issues where you need assets. Like the key ones for us is government bonds, foreign cash, depending upon which currency. We've generally US dollar, but there are other ones that sort of give you benefits there. So. And international shares to a certain extent, but government bonds is the safest part.
Yep.
A little bit more risk in terms of taking foreign cash, because you do have a currency risk, but we think the odds are we need a lower dollar to get the adjustment, and then international shares, depending upon the valuations and where you're getting and things like that. We were a lot more excited about international shares last year, early last year, and we think that. We've been winding back. We still think there are good reasons to have exposure, but we've certainly been winding back in terms of our exposure there.
Okay, all right, fantastic.
But getting diversification.
Yep.
Keep it for people now.
All right, thanks for that, Damien, and thanks very much, gentlemen, for coming in and sharing with us some thoughts on Australia and China and where we think the economy is headed. So we'll jump across into next week. So for next week, same bat time, same bat channel, Thursday the 28th of February, we are looking at franking credits and use. So we're going to have a little run through on our take on some of these proposed changes to the franking credit, or the way it stands now and it may look like under a proposed Labor government. I've got a couple of interesting insights to do with some of the investment side of franking credits and how they relate to overseas versus local investments as well, and some bits and pieces on superannuation. So if you're interested in franking credits at all, feel free to check that one out and head over to our Nucleus Wealth live webinar page to see that one. Look forward to putting that one together for you next week. Well, that's it for now, and thanks for watching. If you like what you heard today and you'd like to hear more, head over to nucleuswealth.com/subscribe. Give us your email address, and in return we'll send you a weekly email with new webinar topics, links for our podcasts and other news from Nucleus Wealth. I certainly hope you've got something out of today, as I have, and we'll look forward to catching you at the next one. Cheers.